Hey everyone, welcome back to Corporate Decoder, the place where we decode the secret language of corporate filings. And today, we're diving into CSX Corporation's latest report to see if their numbers are moving faster than their trains, or if they're stuck at a red signal. Hold on to your hats, folks, because CSX Corp has just dropped its report after its quarterly earnings calls, and we've got the juicy details on their financial performance. Stick around to find out what is really going on under the hood. And hey, if you like getting clear, no-nonsense insights into these massive companies, make sure you're subscribed. Also, we have a fantastic community over on Discord, linked in the description below, where we break down these reports even further. Join us there. This is CSX Corporation, a name you probably know if you've ever seen a freight train chugging along. They are a giant in the rail transportation industry, moving goods across North America. Today, we're relooking at their recent financial update, specifically their results for the quarter ending the 30th of September, 2025. So, what did this report tell us? Well, CSX released its quarterly financial report, and they've attached it for us to dig through. Think of this as their financial scorecard for the past 3 months. Now, the big reason for these reports is to keep investors in the loop. CSX's stock, traded on the Nasdaq under the ticker CSX, is a big deal, and its performance is what a lot of people are watching. This section is all about how the company is doing financially. They've shared their results and a press release with the details. It is like they're saying, here is how we performed, judge us on it. They've given us a press release, which is usually where companies put their most positive spin on the numbers. It is meant to be a highlight reel of their achievements. And then there is the main event, the actual financial report. This document is where the nitty-gritty numbers live, the stuff that tells the real story beyond the press release buzz. These documents are available on their website, which is a good source for investors to check out the full details. But we're here to break down the most important parts for you. Now let's get to the real meat of it all, the actual financial results. We need to look at the numbers to see if CSX is firing on all cylinders, or if there are some problems brewing under the surface. You see, these reports are full of numbers, and while most of them can be a bit dry, a few can tell you a whole lot about the health of the business. Let's start with the top line, the total revenue. This shows us how much money CSX brought in from its operations. It is the total amount of sales generated. A rising revenue means the company is selling more of its services, which is generally a good sign. We want to see if this number is growing compared to previous quarters or the same period last year. Growth here means more trains are running, more goods are being shipped, and more customers are using their services. If it is flat or declining, that could signal market challenges or increased competition. Then we have operating revenue. This is often very similar to total revenue, but specifically focuses on the income generated from the core business operations. For a railroad like CSX, this would be the money earned from hauling freight. Seeing this increase is a direct indicator that their primary business is expanding. It is essential to scrutinize if this growth is sustainable, or if it is being driven by unusual factors that might not repeat in the future. Beyond revenue, what really matters to investors is net income. This is the bottom line, the profit after all expenses, taxes, and interest have been paid. A positive and growing net income means the company is not just bringing in money, but is also good at keeping a portion of it as profit. If net income is shrinking, even if revenue looks okay, it means their costs are going up, or they're facing other financial pressures that are eating into their profits. This is where we see if their efficiency is improving or deteriorating. Looking at these numbers, it is important to also understand the context. CSX operates in a cyclical industry. Economic slowdowns can hit them hard as businesses ship less. Conversely, a strong economy means more goods being transported, boosting their revenues. They're also competing with trucking and other logistics providers, so their pricing power and service quality are key. When we see their revenue and net income figures, we should ask if they are keeping pace with the broader economic trends and outperforming their rivals. A company that consistently grows its net income even in challenging times demonstrates strong management and a resilient business model. Now let's consider the qualitative aspects. What is the story behind these numbers? CSX is all about efficiency and cost control. Their success hinges on running trains on time, utilizing their assets effectively, and managing the enormous costs associated with maintaining a vast rail network. Any news about their operational efficiency, new investments in technology to improve speed or reduce fuel consumption, or strategic partnerships will directly impact their financial performance and their ability to grow that net income. When we look at this report, we're not just seeing numbers on a page. We're seeing the result of strategic decisions, market conditions, and operational execution. Are they investing in the right areas? Are they weathering competition effectively? Are there any hidden risks lurking in the footnotes or disclosures that could impact future performance? For instance, increased fuel costs, labour disputes, or new environmental regulations could all pose significant challenges. The company's ability to manage these external factors and adapt its strategy is crucial for its long-term success and consistent financial health. In my opinion, CSX Corporation is navigating a complex industry. Their ability to consistently deliver on revenue and profit growth, especially in fluctuating economic climates, speaks to their operational strength and strategic execution. The key for them moving forward will be continued investment in efficiency and an agile response to market shifts and regulatory changes. While their scale provides a significant competitive advantage, they must remain vigilant against the evolving landscape of transportation and logistics. The core strength lies in their infrastructure and their ability to move vast quantities of goods crucial to the economy. However, they need to be mindful of operational costs which directly impact their profitability. Alright, that is our breakdown of CSX Corporation's latest financial report. What is your take on these numbers and what they signal for the company's future? Drop your thoughts in the comments below. If this analysis was valuable, hitting that like button really helps, and subscribe for more deep dives into corporate filings. Don't forget to check out our Discord community in the description for even more in-depth discussions. Thanks for watching, see you next time.